네, 시청자 여러분 안녕하세요. 오늘은 특별한 손님을 모셨습니다. 오늘 미국 경제 전반 그리고 트럼프 대통령의 관세 정책 그리고 최근에 주목받고 있는 투자 트렌드까지 다양한 주제를 이야기 나눌 예정인데요. 무려 16시간을 비행하고 오셨습니다. 바로 렉스 파이낸셜의 CEO 스콧 아키첵 만나보도록 하겠습니다. 안녕하세요. Hello, it's nice to meet you.
Great to meet you.
Great to have you back again.
Very exciting.
Okay, we'll deep dive into the key topics. And before, I would like you to introduce yourself to our audience.
Yes, my name is Scott Acheck. I'm the COO of Rex Financial. We're a United States-based exchange-traded product provider. So we have a suite of products that are your trading products. So that's like your leveraged Nvidia, leveraged Tesla, which are very popular. And then we also have our investing products, which are option-based income products, more buy and hold products. So that's things like FANG, Equity Innovation, FEPI. It's a covered call product based on those stocks.
So we'll move on to the questions.
Sure.
There are growing concerns about the US economy with inflation surging and consumer sentiment declining. How do you access the current US states?
Yeah, the United States is a little bit in this like wait and see mode right now. There was a euphoric moment when Donald Trump won his presidency, won the election. You saw all these stocks go, skyrocketing, including Tesla, all these other ones that really rallied pretty high. And now you're starting to see this uncertainty set in from tariffs point of view. I think consumer confidence fell to a 12-year level. Consumer spending is down. I think we need to get through this this tariff period. And once we have that resolution, then we start moving forward, and hopefully brighter days are ahead. But we're definitely in this this odd wait and see kind of moment.
Hope the bright days come soon.
Correct.
The market is anticipating a potential rate cut in June. Do you think the Fed will go ahead with it, or do we need more economic data before making such a decision?
I do think there will be a rate cut coming probably sooner than later, possibly as early as June. The economic data in the United States has been just very sluggish and down. I think you have these investors or companies just kind of struggling with the new administration. So I think it's just hard to build a business or a consumer to really like lay out a lot of money on spending until we move past this period of uncertainty.
So we need to wait and see what's coming up. Trump's intensifying tariff war, and the Trump administration has framed tariff as a way to generate revenue, especially as tax cuts could reduce government income. But retaliatory tariff from other countries could drive up the cost of imports and slow economic growth. Given these potential risks, why do you think Trump is so determined to push ahead with tariff?
Yeah, I think there's a few things. So one, he really wants to reset United States manufacturing. He wants to get more cars built in the United States, more products built in the United States. So he gets to use these tariffs as like a negotiating tool. Yeah. He still wants to eliminate taxes on Social Security. He wants to cut taxes on tips for waiters and waitresses. So he's doing this juggling act where you have all these tax cuts, but at the same time you need to raise money somewhere. So some form of reciprocal tariffs will help him accomplish that goal.
How do you think investors should navigate the stock market under these circumstances going on?
Yeah, in the United States, you're starting to see people allocate to internationally. Like we talked about prior, the European stocks, some Asian countries like China are starting to see inflows from the United States. So for a long period of time, the last few years, a well-balanced asset allocation in the United States was 100% U.S. stocks.
Yeah.
So I think people are waking up that proper asset allocation, proper diversification is back in play, and that includes your fixed income portfolios, that includes international stocks. The number one, I think, sector right now, year to date, is European defense stocks. Which, if you think about it, it makes a lot of sense with the United States pulling back aid from Ukraine. Yeah. It makes sense for European defense stocks to really pick up. There's one ETF in the United States that is focused on European defense. It's EUAD.
Which industries or sectors are most vulnerable to Trump's tariff policies, and are there any sectors that could actually benefit from it?
Yeah, I mean, I think that's an interesting question because if we've talked about Tesla a few times here.
Yeah,
Tesla is actually very well positioned if you think about United States automobile makers because their factory lines are in the United States and the majority of their parts come from the United States as well. So they would be least impacted, I would say, from an automobile segment. So you have these, different layers of, of who would be most affected and who wouldn't be. And it ends up coming down to the individual companies, how much they do domestically, how much they do abroad. But then also this goes back to the negotiating from Donald Trump. Like he could end up with blanket tariffs, on different countries, but then maybe segment it out for different products and services.
How do you see Trump's tariff policy affecting American trade relationship with key partners like China and EU? Could this escalate into a long-term trade war?
Yes, yes. Again, I go back to our closest partners. Even before Trump was in office on January 20th, he was in trade wars already, arguing with Canada and Mexico. So if that's how we are treating our neighbors, I can only imagine, yes, there will be more of that to go around the world, especially where the United States has a negative trade balance.
Does the surge in gold prices indicate growing uncertainty in the markets? And what are the biggest risks investors are trying to hedge against?
Yeah, I think gold is a great tool as a safe haven asset. It's one of those things that you do see flights to when there's inflation, which, maybe we still have some sticky inflation going on. You see it when there's political or geopolitical uncertainty, which, look around the world, there's a lot going on there. And just people that are pausing their equity investments or looking for more diversified portfolios, there's definitely a place for gold in that.
Okay. So if gold continues to rise, what does this signal for the broader financial markets? And should investors be preparing for a downturn?
Well, we've already had quite a bit of a downturn. Quarter one was the worst quarter we've had in over 3 years. So I think people are starting to make allocations on a more diversified basis, again, including international equities, bonds, and things like gold, and even Bitcoin.
You just mentioned about Bitcoin. Trump has been vocal on his support for Bitcoin, but could his broader economic policies like tariff lead to a drop in the price?
Bitcoin was one of the things that had that euphoric moment after Trump won the election, and then it's pulled back since. I think more with crypto than, let's say, automobiles or even defense stocks or healthcare stocks. It's so new. It's really in its nascent stage. So you have this industry that needs new rules and policies put in place. And what's taken place now is a complete reversal of what Joe Biden policies were. The SEC just came out and dropped its lawsuits against Kraken, against Crypto.com. So you're seeing a way more of a pro-crypto kind of administration, but I think it just takes some time for the policies to play out.
And people are moving their eyes from US stocks to other countries like US and China. How do you see the stocks around there?
I think there's many reasons to be bullish non-U.S. stocks. One, they've basically just kind of been in the background because the United States just had this incredible run with the S&P and NASDAQ up 10, 15, 20% every single year. And I think everybody focused a lot of attention there. But again, I go back to, a broader asset allocation piece. It does include international equities. And I think, we've talked before about BYD stepping up in China, becoming a very exciting and interesting stock globally.
You just mentioned about BYD, and China stocks are rising recently a lot. How do you view BYD?
Yeah, well, in the United States, there's no BYD cars.
Yeah.
So I look at it more as like something that's very interesting to me. You're seeing them, beat sales of Tesla for the year. They're growing rapidly. And I think it's a very healthy competition for Tesla to see, have another company that has possibly some slightly better technology in terms of how fast it takes to recharge, but also a little more of a diversified lineup with hybrid cars, whereas Tesla is completely shunned hybrid and is just focused on electric.
So talking about BYD, we'll move on to Tesla as well. Sure. I saw a recent interview with CNBC that you did. You said that despite the political noise and volatility, it remains one of the most ambitious companies. Can you talk about more about that?
Sure. Yeah, I think right now with Tesla, a lot of people are focused on the car itself, right? You're seeing vandalism in the United States against Tesla cars as like a political protest. But Tesla's way more than just a car company, which is why it's exciting, which is why its multiples are higher than everybody else. It has, the autonomous vehicles. It's the leader in the United States, or at least it's supposed to be the leader in the United States. It has robotics breaking out. The current projection is about 5,000 of those humanoid robots to come out this year, which, for right now, I do believe that will happen. And then its energy storage business is growing every single year.
So Nvidia stocks went really high up, but it's going down a lot. Is this due to overall high market expectations? What do you see on that?
Yeah, I think once there started to be like bar parties to watch Nvidia earnings in the United States, it was probably a sign that it might be a little too euphoric of a price. I think right now, kind of similar to this geopolitical and in the United States, Washington, D.C., kind of area of this wait and see kind of approach of what's going on. I think we really need to see some more AI data come out. There are reports that some of the spending is pulling back, and obviously Nvidia will be at the forefront of that because they've been benefiting from it. Their growth numbers have been nothing but astounding, and now it's almost like not enough just to beat earnings or beat expectations, but it's to beat it by these significant margins, which might not be realistic over a long period of time.
Oh, some analysts are also raising concerns about potential AI bubble.
Yeah.
How do you see on that?
I think AI is only growing. The use cases that I see it on a daily basis is only growing. The use cases that I talk about with other business people, it is only growing. The bubble may be more on like the smaller stock front, but with Nvidia being at the front of it, I see their lead maybe kind of coming down a little bit, just as other people create their own chips, and instead of outsourcing chips maybe to Nvidia, they start creating their own, like Amazon is trying to, maybe Microsoft is trying to, but Nvidia has this great lead, and I expect them to maintain it for some time.
We talked about Tesla and also Nvidia. I'm wondering which company among the M7 stocks do you think is the most promising?
I think we're at this period of a larger pullback in the United States. So if you look at it, I would joke and refer to like a defensive Mag 7 stock, like an Apple, that has revenues that are incredible. But the great thing about it is that it's great recurring revenues. We're all using our iPhones, we're all on their apps, and we're constantly handing Apple money. So I think that is a good kind of like, not necessarily safer, maybe a little more of a defensive kind of stock if we live in this period of uncertainty. And if the market reaction to tariffs is probably on the negative side, I think that could do pretty well. If the tariff reaction from the market is lesser, then I still like the Nvidias of the world a lot on a going forward basis if we could get back to this growth market in the United States.
So you have Apple and also Nvidia on your view.
On my view and in my personal allocation, yes.
What types of investment products are currently favored by the U.S. investors? Yeah,
so I still look at it from two buckets. One, on the trading side, we are seeing trading volumes absolutely escalate on MicroStrategy, on Tesla, on Nvidia. I don't see that slowing down. I think there's just so much information that people are kind of processing. And the increased volumes, I think, are kind of here to stay. And then what we're seeing with the United States investors, we're seeing maybe some more safer kind of plays. Instead of just being full growth mode, we are seeing a build out in our covered call products, our income-based products, which are more like tech related. So we have like an AI PI or a FEPI, and that's big tech or AI leaders, and we're selling calls on those stocks. So it pays a great yield, which kind of buffers the downturn, but still allows you to participate in these growth markets.
And thank you for sharing your insights and analysis.
Thank you so much for having me.
네, 오늘 깊이 있는 통찰과 분석을 공유해 주신 스콧 아이잭 CEO님께 진심으로 감사드린다는 말씀 드리도록 하겠습니다. 미국 경제와 시장이 빠르게 변하고 있는 만큼 앞으로도 지속적인 업데이트가 필요할 것 같은데요. 다음에도 좋은 기회가 된다면 다시 모셔서 더 많은 이야기 나눌 수 있길 바라도록 하겠습니다. 저희는 앞으로도 경제와 시장에 대한 중요한 소식들을 전해드릴 테니까요. 많은 관심 부탁드리도록 하겠습니다. 지금까지 함께해 주셔서 감사합니다.